Everybody, it's Shannon from alphatrends.net. Today is Friday, the 8th of June, 2018. Hope you had a good week of trading. The markets were positive here. Only the bonds lost a little bit of ground. Well, I guess the volatility index did as well. But equities across the board were strong here. So let's take a look at the action on the charts and make some sense of it. The S&P 500, as we know, a week and a half ago, gapped down on that little spook about Italy was the excuse for the sell-off. But that turned into nothing here, and just an excuse to trap shorts and get rid of people's stops underneath this year-to-date VWAP, and we've been up and away since then. As I had mentioned, this is a classic case of from a failed move came a fast move higher as we held the year-to-date VWAP and the 20-day moving average. So we closed right on the highs for the week. We saw well, actually, let's just take a look at this once again, because this is pretty interesting. If you look again at the volume, look at all these red candles and look at the corresponding volume on the red days. This is what confuses people about volume with the S&P 500 and the indexes. They view down on heavy volume as negative. But if you actually look at the internals, as I've been stressing, that from that point, from the gap down on the Italy, we saw that the volume weighted average price has been increasing this whole time, and now the average price paid in the S&P 500 since that time is about 273.50. Even yesterday, the market was down on heavier volume, and it was up on lighter volume today. But the average volume of the last 2 days was right here. This is a 2-day volume weighted average price. It was at 277.30 was the average transaction in the S&P 500. That means the average short seller is short at 277.30. The average long over the last 2 days is long at 277.30. Who do you think feels better about their position in the market? So for next week, we look at this market still as innocent until proven guilty. Our first level of importance, the potential support if we see a pullback, would be right here, where we saw basically a little bit of resistance late in the day. Wednesday turned into support on Thursday, and where we have the 5-day moving average as well. So the market, again, is healthy. It looks like it's probably headed for a test of maybe this 280-ish level. If it were to get up to about 280 or so, you would have stops hit off of shorts. You had to have so-called breakout buyers who would typically be late to the party up in there, and it would be a good excuse to sell off. So look at that as a potential area where supply may come into the market. It doesn't mean it will. It's just we don't look at it and say that's resistance. We say that has the potential to become an area where supply may come into the market and slow this overall uptrend down. If that were to happen, then what would we be looking at? Well, we might be looking at a shoulder ahead, and then to form a right shoulder over here for a inverted head and shoulders continuation pattern on this weekly chart where things are decidedly bullish. So the Nasdaq also, this market closed at all-time highs on a weekly basis. We saw exactly what we, kind of what I was talking about with 280 on the S&P. That is, when you see a breakout from an extended level, and this market had run, 4 or 5 days before breaking out, you often see a little bit of a pullback from there. It doesn't mean the market's going to fail. It does have the potential that we could see from a failed breakout comes a fast move lower. But right now we have zero evidence of that. We're above the rising 20, 50, 100, 150, 200-day moving average. We're above the year-to-date volume weighted average price. We're above all the key levels here, indicating buyers are in control. And the average price here since the beginning of the month is something we want to keep an eye on. That's where, we saw a little bit of buying Thursday afternoon, and we recovered from that level today. I think that for Monday, early in the week, if we get down below 173, then maybe we have a little bit deeper of a pullback coming. But for right now, the average price from the highest priced is right now at 174. It takes time for the market to assimilate this, these new prices and create value around them. So right now we're looking at it saying the market is, undecidedly in an uptrend, and if we were to break below 173.50, maybe we get a little bit deeper pullback, but it certainly wouldn't be looking for a top. That's that's basically a fool's game. Maybe it would bring us down to a test of this prior breakout level. That's certainly a possibility, but I update these levels every single day for subscribers to Alpha Trends. And the Russell 2000, as we know, has been the leader this year. This market broke beyond their resistance, tested it, held as support, and has been marching higher since. The 30-minute time frame, we're still well above that rising 5-day moving average. And as long as we're above a rising 5-day moving average, it's innocent until proven guilty. For next week, this 165-ish level is what looks like should be the first important level of potential support if we see a pullback. And if we see a pullback, then that's fine. We need pullbacks to rebuild energy, to get people short, to get people to throw their stocks away and then chase them higher on the next leg higher. The semiconductors are, closing in on the all-time highs here. But, if they were to get up to that level, as I mentioned to subscribers yesterday, I saw some people talking about, look for them to break out. If they're to break out beyond this peak from here, then they will be extended. So it's better that we're seeing exactly what we are seeing is right now a little bit of a pullback. And if it were to pull back even down towards 108, kind of even do this and then build higher once again, I think that would be a great scenario for the semiconductors to continue to all-time highs. But it's been a nice run here the last 6 weeks, we can see. And whenever you get an extended move like that, you just have to raise your overall level of caution a bit. And with this gap lower, we still held above this volume weighted average price. We are below the 5-day moving average. So now if we see a break of 109 next week, then I think that this semiconductor index is probably going to test the rising 20-day moving average. The biotechs, as I've been mentioning, they're healing, they're looking somewhat better, but they're still not at what I consider to be a place where there's a lot of strength and where you want to focus your attention on. There's always uh, individual stocks in any group that behave well, but let's take a look at the financials. We spoke about these financials and people kind of wrote them off after Italy, but even there, since the event, that's what's most important is since the event that changed perceptions overnight drastically, and we saw that big sell-off. Well, since that one knee-jerk move, we've seen the buyers have come in and defended the average price from that level, which is now 27.50, and we have some cushion below us to that level. So a pullback down towards even the 50-day moving average would be a nice thing to see, I think, down near 27.75. We're getting towards the top end of this range that we've seen since basically since mid-March. We've seen 26.50 to 28.50, let's just call it. We're getting towards the high end of that, and I think that, again, a breakout from extended levels has a less likely chance of holding. Instead, it'd be best to see a pullback, create a higher low near that rising 50-day moving average, and then if the financials can break beyond this 28.50 level, then I think the financials are likely to be able to continue to move as the other markets are up towards maybe 29, 29 and a half, and even 30 up to new all-time highs. So, or, recovery highs. So keep that in mind with the financials that they're not quite ready to go yet, but they're certainly looking healthy. The energy names have also begun to heal a little bit too. This is another breakout that I had mentioned that we wanted to be, not chasing because breakouts from extended levels. Where has it come from? It had this, two leg higher move. First this swing, a pullback, and then another swing higher. It, basically hit the measured move objective from that, broke out, trapped people, trapped the breakout buyers, and then had a strong pullback. Well, subsequently, what's happening with the energy names? Let's take a look at that action on a 30-minute time frame. So this is going back to right now, mid-May. The volume weighted average price from the peak, from that breakout, you can see the market is now trying to establish support there. If it can continue to hold above 76 next week, I think that creates a healthier environment for these energy names. And I think that then it's in a better position to break higher from here. So I think the financials, you've got to take a look at, I'm sorry, the energy here is XLF. That, you want to start looking at some of the energy names. A couple names that, where charts look good are, Cliff, CLF, CRZO, uh, is another one. They've got, these are weekly charts we're looking at right now. DNOW, they do something with manufacturing rigs, I believe. I might have that wrong, but nice pullback in here. And here's a stock that looks like, on the weekly chart, it has room to run, as does HLX, Helix Energy. It can break past these levels. These stocks could be the next leaders in this bull market. The financial group has been, look at NOV. It's been down here underneath this resistance for the last 2 years, and it's finally breaking above and holding above. So these are certainly names that look like they have room to run, and I think you should keep your eyes on. Let's take a look quickly at the cryptocurrencies. Let's take a look at Bitcoin first. Bitcoin, we still have issues in these markets. They've got these lower highs still, and we've tried to establish support down near 7,000. If you take a look at this daily time frame here, and on the right, we're kind of blowing it up over here. This is 12-hour candles. So on this 12-hour chart right here, we can see we're creating what looks to me like a bearish flag. So I would be careful with this. If it breaks down from here, we could be seeing a test back down towards the mid 60, 6,500-ish. And the same is true for Ethereum. The Ethereum is also, it's got this prior band of support up in here. We've got volume diminishing on this rally. We've got it below all these bigger moving averages, and breaking down probably below 580-ish, I think could be problems for Ethereum. And that'll do it for now. Tune in every day if you want. I make these videos every day with individual stock names and specific swing trade ideas. So have a good weekend, and thanks for tuning in.